Well, good morning, Bob.
Good morning, Bill.
This is FNC's Morning View. We're on a bright Monday morning. It's the Monday before the presidential election, and let's talk about risk.
Well, there's not going to be much risk if both you and I vote because we'll cancel each other.
Well, how do you know?
Oh, I don't think there's much risk.
So let's talk about what risk is. Risk is uncertainty, and there appears to be uncertainty, at least in the business community. Well, there's certainly a lot of rhetoric around the uncertainty surrounding the election.
Well, you know, if you were a newspaper trying to sell papers, would you want to say that this is a clear win for one side or the other, or you want to say, oh, it's nip and tuck, it's it's very uncertain.
What's the old line that Hearst had? If it bleeds, it reads.
Right.
and so basically, what you want to have happen is you want each side to believe, regardless of which side you're on, each side to believe that they're going to win.
Exactly. Yeah, you want it to be very, very close, and certainly the popular vote is going to be very close. But
We can sell more advertisements too.
yeah, exactly.
So the parties have to, and the candidates have to have more advertising, which is a good thing.
Right.
It helps the economy.
Well, it helps the economy. I bet there's a lot of money that's been spent in advertising.
I bet there's a lot of money changing hands in terms of the efforts to get out the vote, and so that's all good.
Yeah.
Do you think it really affects investment?
Well, certainly the investors and the Wall Street, for example, has been, they were pro-Obama, and now they backed off, and they've been pro-Romney on this in general.
Are they pro whoever helps them?
You would think, but
Most people are.
Yeah, and but this time it's been a little bit different. It's been sort of a lukewarm support of Romney. So maybe they're just covering their bets. I don't know.
It's called hedging, right? Hedging, which is what the street's all about. Making
Yeah, right.
bets,
Yeah. The markets right now, they have these markets where they trade. You can essentially buy a chance on Romney or on Obama, and the markets right now are pretty heavily in favor of Obama. It's about 70 to 80% indicating that he's going to win. And I read a really good book this weekend. I highly recommend it. It's The Signal and the Noise. It's by Nate Silver.
A lot of people have the noise.
Yeah.
They listen to the noise.
You can't get a better topic. Statistics and probability. But
noise.
He runs this 538 blog, and he does all of this analysis of all of the political polling and everything, and it's been very, very accurate historically. And but anyway, he wrote this book, and he talked a lot about financial markets in this book. And
Are they ever wrong?
They sometimes do, But
did anybody call you right before the crash in 2008? Did anybody call you and say it's about to go down?
There were a whole lot of folks that did that. They didn't call me personally, but they sure put out a lot of information about it.
They sure did.
And saying
But
that
the
it was
market
going
didn't
down.
think it was going down because we saw prices of those securities going up and up and up.
It's amazing, because and
And then when the time to get to the exits,
it was too late.
it was like a mad dash.
Flood, yeah, and then
People
that's
got
not
trampled.
And the Consumer Financial Protection Bureau and FHFA announced this past week that they're going to put together this massive new database of everything about mortgages, from origination all the way through servicing. They're going to tie the actual mortgage to the credit bureau reports. They're going to have all of this data. They're going to track all of this. And, basically they're going to have the supreme database about mortgages going forward.
Is that so we will always be able to know when markets are going to go up or down? Because, we've had transparency in equity and debt markets for a long time.
Well, that's the thing that I think needs to be asked. What do you do with that data? Because...
did the rating agencies, as an example, have data on mortgages?
They had the absolute best data. They had fantastic data on all of those structured finance deals that they were rating. They had great data. And yet, after the crash, Sharma, who was the head of S&P, went to Congress and said, no one saw it coming. despite the fact that there were books or articles, there were a huge amount of information about the crash that was coming. But the problem was that the rating agencies were making a ton of profit off of the structured finance, and so they didn't want it to change.
Well, who would?
Moody's revenue from structured finance increased 800% from 97 to 2007. Wouldn't that be good?
Well, that'd be fantastic.
I like 800%. And they had the highest profit margin in the S&P 500 for 5 years during the bubble. They were number one out of the 500.
That's spectacular.
Isn't that great? So why would they want it to change?
They wouldn't.
Exactly.
In fact, that just goes to show you, we talked last week about the role of finance.
Uh-huh.
That just goes to show you finance has a strong role if they're number one.
Exactly.
Awesome.
So it just, it's a big deal. The problem is that because they kept wanting it to go on, they would do all sorts of types of things to make it go on. They
Juice it a little bit?
juice it a little bit, exactly, because S&P, for example, even gave their rating software to the people who were building these structured financial instruments.
So you could structure your instrument and be assured it would get a fantastic rating as you put it together.
Exactly.
What a great deal.
And you could know exactly how many bad loans to slip in there and still get a AAA rating.
That would be spectacular.
As a result, S&P's AAA model, which was projecting that the 5-year foreclosure rate was going to be 0.12%, actually ended up being 28%.
Wow. So basically it was 8 times 28 was the excess loss over the forecast.
Right. So that was a big number, So how does that affect the markets?
Well, how does that really affect Main Street? Let's talk about Wall Street first, and then let's talk about Main Street.
Well, there were an awful lot of people whose pensions were in those AAA bonds.
Absolutely.
And a 28% failure rate is not good for your pension.
It's
return.
not good for anything.
No, and so that affects a lot of people's retirement. A lot of people had to continue on working for a while when they didn't have that return that they expected.
So let's bring this full circle and let's ask the question, do you think the election will have any impact on interest rates, especially mortgage rates?
No.
That's all the Fed.
That's all the Fed. Yeah.
And so basically, in the near term, the election will have little to no impact on interest rates, specifically mortgage rates. How about the mortgage interest deduction?
I don't think that that's going to change. Obama has indicated that he's probably going to stick with that for a while. So Romney has indicated that it needs to be reduced. But I don't think Romney's going to win.
How about the House and the Senate? Will they change hands?
No, I don't. I think it'll stay the same way. The Senate will continue to maintain a majority. The House, the Republicans will maintain a majority.
So no change. We'll
Pretty
still
much
have as a
status
result
quo.
that it'll be, for the most part, gridlock.
I think that the big change that's likely to occur over the next 4 years is we'll start seeing the impact a lot of these new regulations, and the mortgage industry is going to have to adjust to that and figure out how to optimize their business given these
Do you think
regulations.
Industry players in different industries mind new regulations, or it's the changing regulations that causes the problem?
Well, when they're new ones, that's going to change the regulations. But I think once the regulations are established, once everybody is on the same playing field, then I think it's just a matter of
People adjust their business
noise.
models as opposed to truth. Right?
Exactly.
All right. Well, this is FNC's Morning View. I'm Bill Rayburn with Bob Dorsey. Go out and vote this week and have a fantastic week.